Hello everyone, welcome to this week's edition of the Fibonacci Review. Today we're looking at the stock Woolworths, major retailer in Australia, and what we're going to see is a classic example of how you can use the Fibonacci retracements if you want to pyramid or add to an existing position. Now W.D. Gann was a fabulous trader. He got about 90+% of his trades correct as winners. And one of the things he was always doing was looking at the trend of the market, and wherever possible, he would add to an existing position. So he would buy an initial parcel, then as the market climbed, he would add to it at the most convenient time, making sure that the second parcel did not create a problem or incur a loss if it got stopped out. So what we're going to do is to look and see how the markets are actually in a really unique and very powerful balance as they start to climb from low prices. Now in Optima, what we're going to do is to use the Fibonacci retracement tool. I'm going to take it from the major low that occurred here October 17, and we're going to come up to the first peak that occurred through here November 14, and we're just going to run this across to the right hand side. Now, as the market got to this peak, it was $25.50. It got to around $28.65, and you can see that for 1, 2, 3, 4 weeks, it sat consolidating that previous rally, but it did it on a Fibonacci level of 23.6%. And that's a major clue, because if the market then takes out this top, it just means that the low and the high and these lows, these subsequent consolidation lows, are all in natural balance. And that gives us the confidence if the market does break through this top, we could maybe move our stop loss up behind these lows and add some more to our existing position. As the market climbs, what we're going to do, you can see that that was the next low there at 27.70. And if we just drop that back, you can see if we put that through here, from 27.70 to the next peak, again, consolidation. This is normal. This is what markets do. They'll have a rise, and then some of the shorter term traders will exit taking the profit. They might have bought here at 27.80 or at 28 or 28.10. By the time it gets up here to 29.50, they've got a good profit. And what you can see is happening is that the prices come back. The low point is exactly on the 50%, the halfway point between the previous low and the next top. This is the balance point. If the market takes out this particular high, then it's very likely to continue to run. And we know that the 50% level is a crucial level. This is one of the ones that Gann wrote in just about every book. You must know where the 50% level is in every run a market makes. And now you can see why. So all we need to do next is just to move the Fibonacci tool up to that low. You can see that the next peak occurred at this point through here. And again, halfway between the low and the high, the market stops falling and starts to rise. Let's move it again to the next low. So there's the next low there at 29.90. We'll bring it up to the next peak at 32.50. Again, we're getting good support here at the halfway point, and it has another significant run. Now Woolworths is still continuing to climb. Let's just have a look. What we'll do is we'll grab this Fibonacci level and we'll move it from the last low. Let's just bring it up to the next top, and you can see from this low to this high, the market turned at the 38.2% level. So every run since the low, when it has a pullback, it has a pullback in line with nature's harmonic Fibonacci ratio. And this can be a very powerful clue for educated traders. I hope that makes sense for you. And of course, any questions or queries, you're welcome to send them through. See you again next week with another look at this fabulous Fibonacci technique in trading. Bye for now.